the specific language of black hat, white hat is stuff that I just started using that fairly recently because I've been trying to figure out effectively shorthand for looking at the market, looking at investment products in particular. And most of my, working career, I've been speaking to or at financial advisors, right? There've always been, quote unquote, bad guys in finance, right? They're the real bad guys, the actual fraudsters, the Bernie Madoffs of the world, right? But I didn't want us to categorize people as bad people. I don't think that that's accurate. I think there are an enormous number of people who are in finance who have good intentions, but are sort of accidentally creating ecosystems and creating products that are not really beneficial for human flourishing, right? They're in thinking about how the world we live in has changed, dividing out who you can trust to genuinely be on your side seems really important.
Welcome to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest topic of all, money. How to make it, save it, keep it. But our conversations lead us to an even bigger question, what it means to live a rich life beyond money. My guests share their practices, principles, and evergreen wisdom. I'm your host, Bogumil Baranowski, author, TEDx speaker, and investment advisor to wealth creators with patient capital and an infinite investment horizon. I work with families and individuals who aspire to grow wealth over a lifetime and generations through disciplined, thoughtful investments in durable quality businesses while giving money meaning. Join me on this quest to unearth and share the wisdom of the ages. Let me share with you the podcast program disclosure statement. Blue Infinitas Capital LLC is a registered investment advisor, and the opinions expressed by the firm's employees and podcast guests on this show are their own and do not reflect the opinions of Blue Infinitas Capital. All the statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. The information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. The information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. None of what you're about to hear is investment advice. My guest today is Dave Nadig. He is a 30-year veteran of the ETF wars, survivor of 3 market crashes and some real-life ones. He's the original financial blogger, failed stock picker, he says so, I didn't say it, publishing weirdo who thinks that pro-flourishing, anti-suffering capitalism is worth shooting for. How are you, Dave? So nice to see you.
I'm great. That's it. I've got nothing left to say.
I told you when we spoke a few weeks ago, I kept hearing your name and I kept learning about your work through Tom Morgan, who is a dear friend, Matt Ziegler, and then Jack Forehand told me about you and the fact that you're recording with Barry Ritholtz at the time. I have Barry's book with me and I'm talking to Barry in a few weeks. I loved your interview with him. The book is here. Barry.
Great.
But anyway, so many people brought up your name and I just reached out to you and I said, you and I have to talk. I don't know what about, but you and I have to talk. And we had a fantastic hour-long conversation that was not recorded. I have some regrets about it. So we're correcting it today. And I want to start from the beginning. And I love that question and I know quite a bit, but I want to hear more. Your childhood upbringing and how you think that time shaped you, your career. And I'm very curious about your relationship with money as well.
Yeah, interesting question. So childhood to me seems very boring and straightforward. I grew up adjacent to a farm. My parents were both teachers and lived on that farm until I was 13, 14 years old. And I think I got a couple things out of that sort of core, very rural experience. Some of it was good in the sense that I think I learned thrift and self-reliance and a lot of very practical real world skills. I spent a lot of time in nature. I worked with animals a lot. I think there's a lot of value in those things. But at the same time, my family was quite poor. We didn't, we were on government support for most of my young childhood. My father could never keep a job for more than a year. So it wasn't easy. I actually my caloric needs were often largely met because I was down on the farm all day, and I would just get scooped into whatever lunch they were serving, drinking milk out of the back of the cow, as it were. But I definitely ended up with a scarcity mindset. I think it's taken me a long time to realize that I had a real scarcity mindset coming out of that early experience. And, in my adolescence, I think I responded very directly to that because of that scarcity. When I was 13, 14 years old, I asked my parents for a subscription to The Economist. I was very not what my parents were, which was hippies and very counterculture and very in the woods, as you might expect. And I was interested in money and geopolitics and all of those sorts of things. And so over the course of my early career, I sort of gravitated towards finance, towards money, towards business. I got my MBA, et cetera, because I was trying to crack the nut. I was trying to get that thing that was always hanging over the family, which was, can we make the mortgage payment? Can we, what can we actually afford at the grocery store? That kind of thing. So it definitely had an impact. And certainly as I got older and started raising my own kids, I think I was pretty aware of that. And I don't think I went all the other direction and spoiled the heck out of them and made sure that their every single need was met. I tried to instill in them the same kind of self-reliance that I think I had as a kid and love of nature. Like, we live a mile and a half from where I grew up, so they sort of got to grow up in the same neighborhood on the same farms. But I always had that in the back of my head that I needed to provide, in a sense.
You wanted to figure out the money game. How does this thing work? Where does it come from? And the part that I got really intrigued by is, how do you make money with money? You can sell your time, but once you can figure out how to make money with money, new opportunities arise. And we'll come back to that. But I want to ask you about one of the topics you've been writing about on many occasions. You talk about trust, and you and I talked about it too. You talk about the black hat and the white hat world out there, and you mentioned that the black hats are winning. Can you talk about that phenomenon, and in the investment world, in the world in general, what do those terms mean, and what have you observed throughout your career that's changed?
Yeah, the specific language of black hat, white hat is stuff that I just started using that fairly recently, because I've been trying to figure out effectively shorthand for looking at the market, looking at investment products in particular. And most of my working career, I've been speaking to or at financial advisors, right? That's my core audience, or at least I imagine it has been over the years, and industry people. There've always been, quote unquote, bad guys in finance, right? They're the real bad guys, the actual fraudsters, the Bernie Madoffs of the world, right? There are definitely those kinds of actors out there, but I didn't want us to categorize people as bad people. I don't think that that's accurate. I think there are an enormous number of people who are in finance who have good intentions in terms of their general lives, but are sort of accidentally creating ecosystems and creating products that are not really beneficial for human flourishing, right? They're rent extractors from the human condition. They're not really value add. And, that sounds really awful, but I've worked for those kinds of firms too. I've done those kinds of activities. I'll probably do black hat things today. We all do, right? We all do things and have opinions and push for things that, when you really think about them, aren't necessarily generally species beneficial. They're for our family, they're for our community, they're for the people that we especially care about for whatever reason. And so in thinking about how the world we live in has changed, right, in the sort of post-Pax Americana world that we're now in, dividing out who you can trust to genuinely be on your side seems really important. And so as I've been wrestling with that for the last year, because I've been, I took a break from traditional employment for a year, and thinking about where I'd want to go work or the kind of projects I'd want to do, I kept running into that wall of like, well, which side am I on? What are the sides? It's not team red and team blue. It's not good versus evil. It's not that black and white, as you will. So I came back to these old Mad Magazine cartoons of spy versus spy. And if you haven't seen them, go Google them. They're great. They're all wordless.
I saw them.
They're all done by, in the 60s and sort of post-Cuban refugee, post-Castro Cuba land. And the Cold War narrative they told was the black spy and the white spy trying to blow each other up or steal things or whatever. And it just sort of cartoon, adolescent violence kind of way. But the thing I loved about them was there was really no distinction between the black hat and the white hat. They did the same things to each other, but you were just sort of supposed to know that the black hat was the bad guy and the white hat was the good guy. And so I like that framing because I think in finance, we all do the things of finance. We all use all the tools of finance to advance our objectives. What it comes down to is why. And so in dividing the world into the sort of white hat and black hat world, the distinction is primarily why, not what. And that why, as I've defined it, is the white hats are the ones who are just foundationally against suffering and for flourishing. That seems pretty, I'm hoping we can all get on the page that that's a good thing, right? Minimize suffering, improve flourishing. And the black hats aren't necessarily like anti-flourishing and pro-suffering. It's just not their primary ethos. Their primary ethos is secure the bag. Make more money, maximize your systems, optimize your processes to extract as much value as you can from whatever business activity you're in. Again, I'm not saying that's evil. I'm just saying it's not the same as being foundationally pro-flourishing and anti-suffering. And I think in investing, you can draw those lines. I think there are products, there's processes, there's companies where you can say, yes, they may make a lot of money, but they're not pro-flourishing. Like tobacco companies, I think is a really clear one. I'm not saying tobacco companies shouldn't exist, but I think it's really hard to say they're making the world a better place every day.
When I'm listening to you, I'm thinking of my parents. I grew up in a household with 2 physicians, 2 doctors. It was, Cold War Poland, so doctors were not making much money. You became a doctor because you had to be a doctor. It was your calling. So things improved in the 90s, but the first decade, I remember them working nights and days and taking patients and never getting paid for it. They just had to do it. It was their calling. And I really admired that. And I saw it, many other examples of it in my family. My grandmother took over a senior citizen home, publicly owned, government owned, and fixed it up and spent her last 10 years of her career working there and really enjoyed it. So when I came to the investment profession, I thought, I want to help people. And that's what I've been trying to do. And there's so many times when I can't bill for something and there won't be any invoice, but I'm needed and I'll extend the extra hour and do something, right? I might never get any credit for it, but I have to do it because I know how to help. So I brought those memories from my childhood and how I was shaped to a profession where I realized a lot of people come to the investment profession just for the reasons you described, your own pocket. And I think that can work. But if you really want to be successful over many, many decades, not just in terms of the highest net worth, but satisfaction, I don't know, just being happy with what you do, you realize that even in this profession, the non-financial goals and satisfaction take precedence over the paycheck and everything else.
But it's hard to do that because
very hard.
All the feedback loops are you did it, you did well, you get more money, right? Like that's the feedback loop, right? So you get more money, you feel good about that, you can go on the vacation or you can buy the car, so you do more of the thing that got you the money. And so you build yourself this self-reinforcing loop that keeps you from that path. I agree with you. I would love to say that I have spent my career doing the things that I thought were good in the world. That would be a flat out lie. I've mostly done the things that were in front of me that paid the bills. Like every other human being on the planet participating in Western democratic capitalism, that tends to be how most people get through the day. They wake up, they do what's in front of them to pay the bills, and then they hopefully fill their lives with meaning and love somewhere else. But to your point, the times I have enjoyed myself in the act of participating in capitalism the most has been when it's been aligned like that. But I think it's very tough to drive that as an intent. And what I mean by that is not that you can't do it, but that I think I'm a little skeptical of what I sort of see in the broader sphere of like Twitter and podcasting and sort of, the investosphere where we all get our information. There's a lot of, well, do what you love and the money will follow, or step off the path and everything will be fine. And there's some truth to that, but I think we also need to recognize that for a lot of people, that's a ticket to poverty, right? That's a ticket to not actually being able to pay your bills. And so I think there's some realism that's involved in there. And as much as I'm the guy sitting here saying black hat, white hat, I really want to make sure that I say over and over again, that doesn't mean everybody who's in a black hat business running a black hat product is evil, right? That's not what it means. It means they've made a different set of choices about where they are right now.
I love what I'm hearing, and you're very realistic about the world, and I appreciate that. And I think we can get the inspiration, from examples. I got to meet this hospice doctor in real life a few months ago, and we befriended her, and She's having her own health issues now, but she really gave away her life serving people. And to me, she's like an extreme example, to the point that she can't pay rent and she's a doctor because she would take patients that can't pay. And she's just on a mission. Like she took what my parents were doing to a whole new level. And I know that in many professions it's impossible because, as you said, you might not be able to pay your rent eventually if you don't even charge for the work that you do. But I think including a little bit of that where you go out of your way for the client and you know you won't get paid for it, I just have to do it. It's part of me. I can't say I can do it all the time because I wouldn't be even able to pay rent at some point. But I think a little bit of it, I think, can make the world a bit better. And I think that's where you're going with that idea. But yeah, it's more nuanced than that.
And I think most people, look, most of the people that I hold dear in my life who are part of this business, and I think like most people, I have been in largely the same career path for most of my adult life. A very large part of my friend group and, sort of found family comes from that world as well. And when I look at those folks, a lot of people make the choice to establish where they're giving back to the world, if we want to call it that way, or maybe just more authentically connecting to the world. They just do it outside of their job, right? I mean, I know lawyers who do a lot of pro bono work. That's a profession that at least has a clean path for that. Or I think of, financial advisors who sort of pulled the ripcord on the traditional AUM model and decided to do something different to serve underserved populations. Like I think of Tyrone Ross at 401 Financial could be at a 1% charging AUM based financial advisor anywhere in the country, and people will be delighted to have him because he's amazing. Instead, what he's doing is running a largely fee-based practice so that he can serve underserved communities and is making less money because of that. That's a beautiful thing. I think the industry does find ways to let those people find those paths. I think it's much, much harder if you're a young person trying to break in than when you're, an old white guy like me sitting at, the tail end of my career.
I'll just mention, I think you also know when you come across somebody that's in it just for the money. And if you're a client of somebody like that, you have to know that, right? Like if they're, I just picture, going to a doctor who just cares about how much he's going to bill for whatever surgery you need, right? And you're thinking, I would love that person to have their heart in it, to do the right thing, even if I'm not watching, even if I'm not able to evaluate what they're doing. And something different can happen. If you come across somebody that's in it only for the money, I think you can get in trouble at some point. But let's leave it.
Yeah, and I think you're right. I think it's, if you have a little bit of discernment, I don't think it's that hard to find out.
Put a little bit of heart in it. I want to ask you about passive investing, and we won't talk a lot about it, but I'm very curious because it's the world that you've been in for so long. And to me, it makes me think of Tony Deaton, who is a famous Swiss-based investor who was asked to, recommend an investment at a conference. And he said, it's like asking a doctor to recommend a medication. I don't know what you need. And I feel like passive investing, I don't know what you need. If I knew, I could tell you if it's good for you. So I think in some contexts it works, in others, I don't think it does. But anyways, it had a huge impact on the industry, on how the markets function, on fees. And in many different ways, it made the world better, but it also made it more fragile. How do you look at that?
Yeah, absolutely. I think my whole career has mapped the rise of passive investing. I started investing literally right before the crash in 87. All right. I was 19 years old. I had a tiny bit of money, like a couple grand maybe, lost a ton of it in the crash. And that's part of what threw me into business school. I was like, I got to understand how this is working because I'd been a poetry major before that. So that whole rise from 1987 to the SEC report afterwards, which is really what kicked off the rise of passive investing and ETFs in particular. I was fascinated enough that I was reading that stuff in the library at the University of Massachusetts when it was coming out in 1989, and I was home for a vacation. So those kinds of things really impacted my perception of how and what markets do. Or what they are and what they do. And so my first real big job was working at Wells Fargo Nico Investment Advisors in 1992, helping package up passive investing for retirement savers. Specifically, the first target date funds was what I was working on in 92. And the insight there that the plight of a retirement investor who was 23 years old and signing up for their 401k for the first time, the light switches I would see go off in the eyeballs of people we would pitch this to was intoxicating, honestly. It's part of what got me excited about this job is I would literally go into these boring investment committee meetings for a large corporation, and Wells Fargo Nico would be pitching, you can get into our closed target date funds and they'll solve your investor problems and you can just sign people people up for them automatically. And like, it was like this giant weight fell off everybody, because otherwise they were sitting here trying to figure out, well, am I picking a Janus mutual fund or a Capital Group mutual fund, and trying to figure, and they were all way too expensive and none of them performed the way you expected them to. So passive in that environment was just like manna from heaven at the time. And I rode that for a good number of years until I started to get, frankly, bored with it. I mean, in the early days, in the 90s in particular, we had SPY, we had a handful of follow-on products like the mid-cap. We had the Webs products, which I launched with the team at Wells Fargo Nico, which then became BGI. Those products are still out there. Those were the first 16 country funds. And then by the time we get to the turn of 2000, yeah, there's a little bit of extra stuff coming in, but we don't have really passive fixed income is not a thing yet. We definitely don't have passive in any other asset class like commodities or anything like that. So really all we were doing was getting rid of stockbrokers and bad fund managers and sort of anti-Peter Lynching the world. And that was great. That worked. But I decided I was smarter than that and became an active fund manager in 1998 and did terrible on that run, got my, burned off through the 2000-2001 era, and kind of became a hard convert back to passive investing at that point for, I think, obvious reasons. And I think since then, my view on passive is a little bit more nuanced. I think as a cost-saving vehicle, it's unmatched. And I think Bogle was right about that. My favorite thing that Jack Bogle ever said to me was boring and forgetful is sometimes the best thing to be. And boring and forgetful is great for passive investing. And so for a lot of non-investors, for participants, which is what we call them in the US, passive is the only thing that made sense, frankly, for most of my career. That doesn't mean it's the only way anybody should invest, but I think for somebody who is a participant, not an investor, not a speculator, it's the only thing that makes sense. The flip side, as we've learned over the last decade, is that there's such a thing as too much of a good thing. And I think at this point, I'm fairly convinced by the academic research, particularly the work of Gabay and Cushion on this, that flow from passive or into passive vehicles has a really disproportionate impact on how particularly the top of the food chain in equities works. And in bonds. In bonds, it's much more of a liquidity issue, where the haves and have-nots in bond indexes have really significant performance deltas. But just in the normal S&P 500, it's actually fairly straightforward to explain things like the momentum effect of the Mag 7 simply by looking at flow. Flow really drives most of this. And at this point, we have a complex of securities from the ETFs to the collective investment trust that most of the retirement market uses, to the entire derivatives stack from swaps and options and futures down. All of that is now keyed off the same lists of securities, and everybody's moving the money around in the same Delta One way. That has impacts, obviously. And I get frustrated when people think it has no impact. The problem with observing that is then everybody says, well, what are you going to do? Ban them? And I'm like, no, but we should be observing what's going on so that we have clear eyes on the world. It doesn't mean that everything, you just have to like pull the ripcord and do everything. I feel the same way about things like climate change. We should acknowledge things that are actually happening in the real world. It doesn't mean that we immediately ban gasoline, right? We can be a little more nuanced in our thinking. We are human beings.
I pulled up an annual report the other day, a new company I'm looking at, I haven't looked at in a while, and I'm reading that annual report, and the thought I had, maybe in preparation for this conversation, I was thinking, who is actually still reading those? I am. I know people who are. Maybe I'm in a universe of my own, but we're actually reading those things. We're reading filings, and companies tell you quite a bit about what's going on. They talk to you 4 times a year. They give you, earnings releases, and you can read the transcript or you can listen to the whole thing in the comfort of your home. But then I'm thinking, who's actually doing it? And passive is, I think it's a brilliant idea. And you said, too much of the good thing. Bogle, actually, the idea was born in the 70s. There was a very tough decade for active managers. They got it all wrong. Many did. We know that Buffett emerged from that period into a very successful investor, but many did not. So Bogle at the time was just like you in the 90s, just convinced that active is too hard. But anyways, I always wonder, who is actually reading this stuff? And the second thought I had, Chris Mayer, who wrote The 100 Beggars, reminded me of that. At the end of the day, we want to own stuff. We want to own the asset. That's how you get rich. That's how you stay rich. That's how you get rich. How do you own the asset? The public market is a beautiful invention, right? If you have a successful local business, it's owned by but brother and sister, and they won't let you in on it, right? They don't want you to be a partner. The public market allows you to buy shares in any company you want. Now, how are you going to go about it? That's another question. Passive is just yet another way to do what Chris Mayer told me, which I completely agree with. You have to own things. You have to own assets. You have to own, income-producing assets, and that's the path to do it.
Yeah, I can't disagree with the math of anything that you've said. I think there's a bit of a caveat I'd put on that, which is I think a lot of the problems that we've seen come out of passive investing have been, depends where you want to trace it to. I trace a lot of this back to George Bush and his push for the ownership society, where everybody owned a house, everybody participated in the stock market, and effectively we end up with backwards communism, right? Where in fact, everybody does own everything, but you do it through public markets.
But then you actually own it, because I grew up in a communist country and we didn't own anything.
No, I get that. The problem, though, is exactly what we've seen in the last 5 years, which is actual capital formation, actual real wealth doesn't happen in the public markets. It happens in the private markets, which most individuals don't have any access to, nor should they, frankly, the way the rules are structured right now. I'm not saying everybody should be in PE. I'm kind of on the other side of that trade. But capitalism, market capitalism, as it was built in the United States really over the last 100 years, doesn't do what we think it does. It doesn't efficiently allocate capital for societal good. That's the point of capitalism, right? Ask why did the human biological agent develop capitalism? It's to manage the distribution of resources, right? That's what all economic systems do. Capitalism is a great one for that, but it's only a great one when it's aligned towards human flourishing, right? When the society builds the rules that capitalism works by so that we do allocate capital efficiently, that we do create opportunities for people to participate in wealth creation. I don't think capital markets do that anymore. I think capital markets are largely the casino where capitalism cashes out, right? Most companies will not go public now until they're guaranteed index participation. Think about that. You're not willing to be a company in public until you are no longer traded individually as a company in public. That's messed up, right? And so, that doesn't mean that individual securities won't move around. Of course they will. But you can just look at something like what's happened to Tesla and say, well, okay, was that really a high efficiency allocation of capital based on long-term societal benefit in either the run-up or the crash that's happened down? No, of course not. It's a sentiment trade in a casino. That's all it's been. So that's kind of the problem I have with your statement that we all want to own everything. Yeah, when the rules are right.
Dave, what I'm thinking is imagine a world where everybody's reading those filings, everybody's thinking about those companies, everybody's analyzing those companies, and we really have millions of participants in the market that are so smart and so engaged. And we're going to talk about attention in a minute. They give the attention to their investments, but that's not the case. So if anything, it could be a second chance for the active manager to actually make a difference, because I read that stuff. I care what I own.
Well, to answer your question about who's reading that stuff, I think the answer is AI, right? Those reports are read more by agents than they are by individuals at this point. There are still obviously guys like you and folks at Morgan Stanley still reading individual company reports. And hey, the Motley Fool still has 500,000 subscribers and they're just doing single stock analysis, right? So there are people out there doing that work. But as David Einhorn has said recently, I think in a podcast with Barry Ritholtz last fall, you would think that we can actually make more money now because everybody's passive. The answer is he's actually cut his VIG in half. He used to be able to invest in something thinking it would be a 5-bagger. Now he won't put a dime in it till it's a 10-bagger. Right. So he's got to be that much more convicted on a particular play. The reason is because tomorrow you can get somebody showing up with a couple $1 billion to move into the Russell, and that will just overwhelm anything that you thought you were smart about, right? In terms of whether that goes up or down. So, I think at this point, almost every active play has to be a pairs trade because you can't bet on whole markets anymore because they're all just going to go up based on the endless bid.
I think it's fascinating that the world is changing so much, and just to keep up with it, it. You have to know what's going on. And it's not the same market that was there when I started investing, 20 some years ago. It's a different market.
Totally.
And at the end of the day, these are businesses. They're doing things that apparently are useful because people pay for them. And some of us get to own them one way or the other. And, the essence, the foundation is there. How we go about it, any extreme is not going to make it work. If we went all 100% passive, this thing wouldn't work because nobody would question if this company's doing the right thing or get punished if they're doing the wrong thing. And if it was all active, I think it would be a fascinating experiment if everybody went back to actually reading this stuff, even with the help of AI. Because AI just gives you the summary. AI doesn't evaluate things. The reason I say it, I saw smart people sit in the room, look at the same summary written by a smart analyst, and they walk away with opposing views.
Yeah,
so to me,
we all filter everything through our own reality tunnel. So I think that's inescapable. I would push back a little bit on the 100%, 0%. What we've actually done, I fear, in the market is long-term investing is largely entirely passive now. I say that with a bit of an asterisk. Obviously, there are folks like the Nordic pension funds, right? They as a group aren't passively managed, but they use a lot of passive vehicles to express their opinions. And so it makes a big difference when they say we're divesting from XYZ. So yeah, there's some long-term money, but mostly that money is actually long-term and actually invested for the long haul. And we'll make some calls around the corners, but they're not sitting there saying, we're selling Ford and we're buying, a Tesla today because of this report. They're not doing that. They're much more longer term. The folks that are actually doing the kind of analysis that you're talking about are trading zero date expiration options, right? So the price discovery of active management is now compressed into such short time horizons that it doesn't actually land in terms of wealth creation. It's pure speculation. There's not enough time for you to be right about these things past the initial read. So you read that annual report, you may develop a really strong opinion about what it means for this company in 5 years. I would argue that's irrelevant because its actual price performance is probably not going to match your view of what it should be in 5 years, because if the street thinks they missed something, you could reset down 15%. And now maybe your position's great because now it's actually cheap enough, or it's going to reset 15% higher, in which case you missed your entry opportunity and it's already been priced in. I'm skeptical that you can fix that timing difference. And if you don't fix that timing difference, I don't think you go back to sort of traditional rational stock analysis.
I tell people that I don't think I'm smarter than anybody else. I'm definitely not faster than anybody else, but I'm more patient. And I'm very grateful for the clients I work with, families with multi-generational wealth. They can wait. So we take stakes, and I have some positions that I've held for 10 years. And maybe that's unique in this world, but if you can take such a long-term view and then completely ignore all this noise quarter to quarter, I think there are opportunities.
I think people do that very successfully. I think they mostly do that in private markets now.
That might be true. That might be the next frontier. Dave, I want to ask you about the brain. You write about the brain. Let's switch topics. I wanted to ask you about the brain. You write that left brain is narrow and technical, and then the right brain is open, alert, aware of the abundance, and the two coexist. Tell me more how you look at it. And I know it's a big topic. Tom Morgan talks about it. I'm fascinated with it because the minute you start to see the world that way, you can't unsee it. So what do you see that we don't see?
Yeah. I mean, I've been fascinated by consciousness ever since I came down with epilepsy in 94. And I had a bad fall rock climbing, and my brain's never been the same since. And so I've been trying to figure out what the heck's been going on in my brain for a long time. The whole hemispherism left-right thing largely discredited and now back in the mainstream because of this work from a guy named Dr. Ian McGillchrist, who wrote a book called The Master and His Emissary, and then another one called The Matter with Things, where he disabuses of those old notions that like creativity versus math, like, which is how we used to think about it. It is much more provably about the kind of attention the two parts of our brain pay, not that the one pays attention and one doesn't. I tend to agree with McGillchrist's analysis or diagnosis of Western society that we become very left brain dominant. We're very much about separation. We're very much about rules and systems and processes. We're constantly trying to break things down so that there are no paradoxes and no contradictions anymore. That's very left brain thinking. The right brain is very good at handling things like paradoxes prices or holding the long term and the short term together at the same point. Its job is to maintain open awareness for predators while our left brain is harvesting food or pulling back a bowstring to hunt a deer. So it's a natural thing, and the bilateral brain is something we see in all throughout nature, often in these sort of competitive species, in mammals in particular, right? You've got animals that have to be aware of their environment while they're picking the difference between a grain of sand and a seed on the ground. So that disparate attention, I think, is a superpower, right? It's something that it's a God-given superpower that we don't train. Like, we don't train how to use the two of them interchangeably. We don't even train our awareness of them being active at a given point in time. So I spent a lot of time, particularly in the last 5 years, in meditation in particular, learning how to discern what my brain is doing in different environments. And I think that's a really valuable skill for anybody who's an investor, but particularly for anybody who's a trader. I'm a big fan of this guy, Brent Donnelly, who's a currency trader, he runs AMFX Currency at Spectrum Markets. And he has a great book called Alpha Trader, which isn't about meditation at all. But what he does talk a lot about is these very specific attention tricks that we need to do in order to be able to be good traders in the moment, because emotions come in very quickly. Oh, I lost a bunch of money. Oh, I made a bunch of money. And when that's happening in a really fast environment where you're also trying to take in a lot of information, you've got to be able to discern, well, what is me being excited and what is the real world being different than it was 5 minutes ago? That's a trainable skill. So that's my main insight in terms of how the focus on attention translates into investing, is that you've got to be able to do both at the same time. I've come to meditation as a great tool for that. Initially for me, it was about managing reactivity, which I think a lot of people come to meditation for that reason, right? They don't like their emotional responses, in the moment, and they're trying to chill out. And indeed, meditation can get you there. But it's not because meditation chills you out. It's because meditation gives you tools and the space and the acuity to recognize your own internal monologue, your own internal thought formations as different than reality. That's the thing I think most investors don't get, which is that their perception of things is inherently and always not reality. It's always wrong. There's always something you don't know. There's always some assumption that you've made. So if you're not coming to investing with that inherent skepticism that I'm always wrong, I don't see how you can possibly be right.
I say that I want to be the least wrong, and I'm always wondering, if I'm wrong, how much it's going to cost me. It's a beautiful sunny day. You run out of the house and I'm thinking, take the umbrella, don't take the umbrella. If I don't take it, worst case, I'm just going to get wet. But if I'm going to an important meeting, I'm wearing a nice suit and I'm going to get wet, I'm just going to mess up this meeting, right? So I'm immediately running through this calculation. Is this worth the risk worth taking in case I'm wrong? And you're right. I think it's very humbling to think that you could be more wrong than you realize in more cases, and the blind spots are everywhere.
I think I'm not somebody who thinks everybody should go meditate. If you're not drawn to it, don't do it. But I do think that paying attention to your own thought process, however you get there, whether you journal, whatever it is that you do that gives you that metacognitive awareness of how you think and what you think about, that seems so foundational to decision making that it should be like 101 in business school when you're learning about investing, right? Barry, in the book that you promoted right at the beginning of it, one of the things he says in there is that your first job as an investor is to understand reality. That sounds really simple, but most people get the first step.
Very much so. I'm very, very curious about meditation, and you and I talked more about it. We both ended up at the same monastery at different points in time, probably for similar or maybe different reasons. For me, it was, I think, about 15 years ago. I was just overwhelmed, New York pace, New York work, and it was right after the financial crisis. I think people were on the edge, and I just needed to go somewhere and be quiet. And I absolutely love that time at that monastery. But tell me about how you think of that particular place and meditation. And I want to focus on the word attention. I feel like we just don't have enough of it. And if anything, looking forward, I feel like we're going to have less of it. So we have to be proactive about protecting it in some way, having more of it?
So without going too deep on like modalities and traditions and stuff like that, the place we're talking about is the Zen Mountain Monastery in Mount Tremper, New York. I'm sure they'd be delighted to have us talking about it. It is an extraordinarily welcoming place. It's built in an old Lutheran summer camp. It's just beautiful, giant old building with maybe a dozen or 15 like lifetime monastics there, and maybe another dozen or so people who are residents or working there or something like that. So it's a fairly small place, beautifully set on the side of a hill. For me, the irony is the view outside any one of those windows is the same as the view outside my house. I live in those woods. It's only an hour and a half away. So like there's no real difference in the biome of that space versus where I live every day. The difference is the container that a place like that gives you to explore. And so the value for me is both some of the tradition of, it's a very traditional Soto Zen monastery, lots of bells, lots of incense, lots of ritual, lots of chanting, which some people get turned off on, but I was raised Episcopalian, so I love that stuff. And so that container creates the space to explore what's going on inside your own head. And I think that the thing that people get, I've now taken, I don't know, a dozen people up to the monastery. They do a weekend. The first weekend of every month is newbie weekend. And I always bring people up to go sit for a couple of days. And I think the thing that people are most surprised about is how little goes on, right? Like you go to a meditation retreat and you expect something to happen. Well, guess what? Not much happens, right? It's a container to spend a lot of time doing absolutely nothing in silence. And I think when you do that, you're forced to understand how badly your brain is lying to you all the time, right? And I think anybody watching this could do this right now. Turn off everything in your room, close your eyes for 5 minutes, then open your eyes and write down what happened. I'm pretty sure the answer for most people is going to be something. It's not going to be, well, no, I was blank and completely open awareness and had zero thoughts for 5 minutes. No, you're sitting here thinking, oh God, I've got a meeting in 3 hours. And God, I wish I hadn't fought with my wife about that. And God, I'm hungry. What did I have for breakfast? Oh, I don't feel so well, right? Like constant, whether it's vocalized or not vocalized, everybody I've ever talked to, given that opportunity, their first sit is like, wow, I had no idea I had so many people in me.
It's crowded. When I'm listening to you, I'm thinking that before, and I don't want to blame technology on all of it, but when I was a kid and you would go to, I don't know, a doctor's office, you would sit in the room or anywhere, and you would have a book with you. Maybe there was a newspaper, but you would have moments just with your thoughts. Like there was nothing going on. There were so many moments, waiting for the bus and waiting for the class to start. And now in those moments, we have a phone and you really have no time just with you. I don't, unless I create it, right? I could really fill up. There's no time to be bored. There's no time not to be entertained. You have to create those spaces.
Yeah, and I think it's tough to create those spaces in the modern world. I think it's easy to sort of get slightly smirky about things like a digital detox or, putting your phone in a special place. But like even me, who it sounds like I know it sounds like I live in this like idyllic land where like Snow White lives and people are going to come have birds landing on my head or something. But even me, like I have a room where I meditate every day. It took me like 2 years of regular daily practice to realize, oh, I need to have a place to put all of my electronics that is not in this room because, I could be sitting for an hour and a half and then something pops into my head and I'll be unable to not grab my phone and be like, oh, I just got to send Tom this one note. Like, I can't do it. So yes, you have to create those spaces to have any idea what's going on inside your own head. I don't think it has to be as simple. I don't think it has to be meditation. And I don't think it just has to be about putting your cell phone away. For me, for a long time, it was church, right? I mean, Sundays was when I turned all that stuff off and I replaced it with liturgy and I replaced it with ritual and I replaced it with prayer and all of that, which in the end wasn't, I think, my ultimate path, but it created that space for me. And I was grateful for that tradition and having been part of that tradition essentially since I was a child, because it was clearly a space for that. It is still to this day in every church I've ever been to completely inappropriate to sit there in the front pew and look at your phone. People don't do that in my experience. And so at least it creates that space. So I don't think you have to make a big deal out about this. I think a lot of people already have a tradition that creates that space. They may have just walked away from it.
I think it's a tool. It's a tool, it's a framework, it's something that can help. I talked to William Green, who wrote Richer, Wiser, Happier, and he explained how when March 2020 happened, people were overwhelmed. And some people, I think, are feeling overwhelmed this year as well in many ways. I need to have certain tools, frameworks to deploy in moments like this. I'm a relatively calm and peaceful person, but there are moments where I do need to reset and find my peace. I accumulate a lot of energy just talking to clients who are going through things, and they have nothing to do with the portfolios, but with their life. And eventually you realize I have to sit down and just hear nothing for a minute. And it's very helpful because it's so easy to just get started on the next thing and the next thing and the next thing. I love that topic. And somehow in my mind, it's connected to flying. And I want to bring up flying because you and I talked about flying. We both flew planes. We know what it's like. I was always fascinated both with the idea of going up in the air, the sensation, and what it takes to be a successful, meaning surviving, pilot. Can you talk about your experience, how you discovered flying?
Yeah, I'm gonna get weepy and start crying though. I've been addicted to flight my whole life. When I was a very young child, like 6, 7 years old, and we had our first Christmas tree that I remember we put a seagull on top of it. Mm-hmm. And when I asked why, my mother gave me a copy of Jonathan Livingston's Seagull, which is a beautiful short book about a seagull who's addicted to flying. Like the flying is the thing that gives him joy and peace and eventually transcendence. And I loved that story to death. And then later on, I read the rest of everything Richard Bach has ever written, and all of it is about flying. So Illusions is another book about being a biplane pilot. He wrote Stranger to the Ground, which is about being a night pilot in World War II, or maybe it was Korea. So I've got the bug really early on that stuff. And, in the pre-internet days in the 70s when I grew up, my exposure to the world was largely movies in the library. We had one TV station. That was what we could get on the rabbit ears. So that was my way of consuming the world. And so I would sit there and read, Boys Life magazine and see the model airplanes in the back. And I would go to movies and see all the war movies with all the flying scenes, Battle of Midway, Battle of Britain. Loved all of that stuff and got really hooked on it. And so never had the opportunity to be able to afford something like actually flying other than, occasionally in a commercial airplane. But in the 90s, I had a brief window when I was a fund manager where I had enough money to go get my pilot's license. And so I flew from about, I'm going to guess, 97 to something. And when I really started getting epilepsy, I lost my ticket. So I only had a narrow window when I was flying, but boy, I flew the heck. I flew every opportunity I could. I spent way too much money renting airplanes. I was doing sportsman's aerobatic competitions. Flying upside down to me is the most amazing feeling in the world. And then when I lost my ticket, it sent me into the most spiraling depression of my life. You would think it was you developed epilepsy, you have a major medical condition, that should be your problem. No, all I cared about was the fact that I couldn't fly anymore. And I tried every way I could find to negotiate around it. But in the US, you basically have one unexplained loss of consciousness, one ULOC, and you never get your ticket back. And so I have not been able to fly since then. What I replaced it with is first-person drones, which, despite the fact that that is now an implement of war in the Ukraine, flying a first-person drone with a high-definition headset on your face is about as close as you can get to actually flying an airplane, and you can do way cooler stuff than you can do in an airplane. So, but that feeling, that focus, to me was very, very early, was clearly a meditative experience, right? I mean, instantaneous flow state, everything goes out of my brain except the act of flying itself and communicating, which are the two main skills. Tell me a little bit about your experience flying. And do you not fly anymore?
It's been a while and COVID interrupted it. But I was always fascinated with flying. And when my parents asked me when I was a kid what I want to do, I said, I want to be a pilot. But this was, Cold War Poland. So they told me then you're going to be serving in the army and helping the Soviets fight the world, because Poland was on the wrong side of that equation at the time. So that was an argument not to be a military pilot. But anyways, when I moved to New York, I had the opportunity and I met some pilots. I ended up going to an airport outside of New York and getting my license and flying and just loving it and taking my wife up in the air over New York, which she loved. In the fall, when the colors change and you can fly over the park, and they recognize, the towers recognize the planes because it's the same plane. So they recognize your tail number and they say, oh, you're flying with Tom. Tom was my instructor. And then they would let me fly, because sometimes they would say, we don't want the traffic over the park, but they would let me fly over the parks. I have some fun memories of flying around New York, and it brings together everything we talked about. I think you need two sides of your brain. at the same time, right? You need the attention. Like very few things in life require that kind of attention. You know, I'm thinking open heart surgery. It's a whole different category, right? But there are very few things that many of us could try that require that kind of attention. And then it's very meditative to me. And you have to be calm and collected even when things are not going your way. We're talking about being wrong. Here, being wrong, the price is too high to pay.
Yeah. Yeah. And I think that there is something about moving through space, not to derail this, but the act of taking your center of awareness, like ears, eyes, the whole thing, and moving it through reality, I think has real transformative power. Now, I think things like high-speed driving, scuba diving, flying, these are particularly great because they force you into certain modes of attention. Flying is a great one where, you know, if you are distracted flying, you will die. Right? I mean, it's really that simple, right?
Yes.
The kind of mistakes that people make parking in New York result in airplanes ending up upside down, right? So the level of attention, as you point out, is much more focused and has a much higher cost to being wrong. Mm-hmm. But it also, you have to have that open awareness at the same time. I remember the first time I ever did like a good long cross-country flight. I think it was from like Maine down to Martha's Vineyard or something like that. A couple hours in an airplane in controlled airspace, and you're moving between, you know, actually aviating and flying the airplane, which is largely a feel thing, right? It's a very felt experience. Like driving a car fast is mostly about your butt and your hands, not your head. So the actual, like, there are bumps, I've got to move, I've got to adjust for wind, my altitude's wrong. There's a lot of persnicketyness, but it's still very much a felt experience. And then the other part of it, which is what's going on outside the airplane, also has to have both of those components, because you need to be in constant communication with radio and changing frequencies and understanding where you are on the map and understanding the procedures for the airport you're going to and knowing where your nearest bailout airport is and all that in real time all the time. And at the same time, you need to be able to be completely aware of everything in the space around you, because otherwise you run into stuff. Like, I think I flew mostly in the sort of Boston area up and down. It's completely packed with airplanes. Like, I've had multiple near misses with people in the air. So like, you got to have both. And I think moving through space gives that to you. I think riding a bicycle, I think swimming in particular, I think can really get you both of those things at the same time. So yeah, I wish everybody in the world could have the experience of flying an airplane. I think we'd be in a better world.
It's a completely different perspective, right? And it's just, I don't know. It's, you said scuba diving. I love scuba diving. Also, for many reasons, not just nature and what you get to see, but the sensation that we can have of being weightless, as if you were in space. Yet you're surrounded not by just darkness, but beautiful life and everything else. There's something about it that you see the world from a different perspective. And your body says you're not supposed to be breathing underwater. The same way your body says you shouldn't be flying, 10,000 feet above the ground.
Exactly.
In this little bucket.
Well, and also another sport with another activity with a very high fail bar, right? Mm-hmm. Like, yes. There's a lot of little persnickety stuff you need to know to be a scuba diver. Now, most of it's done by a watch, but when I started scuba diving, it was done on little tables with a pen you wrote on, underwater, and you had to keep track of math while you were having this transcendental experience of being in another body floating through water.
But again, it's like investing. You have to figure out what doesn't work, what can get you in trouble. And let's call out Barry again. But he wrote a book, How Not to Invest. He wrote it for a reason. He told us what not to do, which in those pursuits, like investing or flying or scuba diving, and there are many more, where if you know what you're not supposed to do, where it can get you in trouble, at least you have a chance of staying afloat or breathing, right? And in investing, staying with the money that you started with, hopefully more. So I think that there's a lesson there. You don't go in to be right. You first figure out how can you mess up.
I think there's real truth to that. I think the main thing most folks I know miss with investing is the right brain is completely absent, right? Investing is fantastic for people who are real rabbit hole divers, because there's always more data. There's always another system. There's always another report to read. There's always more information. There's always something new to learn, to dissect, to get narrower on. And most of the time, that's the wrong thing to do. Like, as an investor, most of the time getting narrower is not going to make you a better investor. Getting better context is what's going to make you a better investor, right? I mean, this goes back to ancient, academic finance stuff, like the old Bernstein stuff. Mm-hmm. Your asset allocation decision is really going to explain most of your portfolio variance. So you should probably focus on that primarily, and then inside those assets you can get narrower and try to generate alpha in those spaces. But most investors I know don't even think about that. Like I talked to so many financial advisors who were very concerned about whether or not Tesla's in their portfolio or whether or not they're over or underweight the Mag 7, but haven't touched their US versus international allocation in 7 years. Like, if the world's changed in 7 years, probably whether you're 50% in the US or 60% in the US is going to make a bigger difference. And very few investors really seem to think from that broad, what is the actual investable universe look like? And have I made a conscious decision to not be in copper and instead be in aluminum, right? I mean, people don't make those decisions.
Oh, that's true. I want to bring up one more topic that I don't want to forget. You write about AI tools, and we talked about technology. You just talked about going down the rabbit hole, collecting all the information. I'm curious because you share how you use AI tools in your everyday work. You write a lot and you research. How has it changed the way you operate?
A couple ways. First, I can't sing the praises of things like Perplexity deep research enough. Mm-hmm. The ability to get 2 inches deep on a topic, which is what I think that really lets you do without going through the sort of search and analysis and double checking. And is this redundant process of traditional, going through a bunch of academic websites and pulling down papers and skimming them? Like, that's cut an enormous amount of my process down. So if I wanted to, for instance, learn, like I was looking this morning at CDX basis for just random reasons, like historically, I would have gone to my Bloomberg terminal, pulled up a thing, gone somewhere else, pulled up another thing, gone to market, pulled down what their contract specifications were, blah, 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 blah. Now you can just sort of go to Perplexity Deep Research and say, write me a paper on how CDX basis is calculated and who the players are. And it's not going to be right, but it's going to give me pointers in all the right directions. So that by itself has been a huge win. As a coding hack, it's been enormously helpful for me with big caveats. So I often end up with giant piles of data and I want to do something with them. So for example, yesterday I had a big data dump from ETF Action, best data sources out there for the public, 20,000 cells in a sheet kind of thing. Not a ton of data. Normally what I would have done 5 years ago is I would have dug into that with Excel and I would have written a few little pieces of code. And I'm relatively good at that kind of stuff. And if it's something had been really hard, I might have gone into R and coded something up if I was really doing something statistical, but very rarely. Now I can take that whole sheet, dump it into Claude Sonnet 3.7 and say, great, write me a Python program that loads all this into a data set, and then I want to work on visualizations of these 6 or 7 different things and have a conversation with an agent who's going to code that stuff up. That process is really revelatory. The output, 75% of the time, I'm going to end up doing it myself to get what I want better at the end. So I'm going to end up repeating work, but as an iteration tool, holy cow. It's like having the best intern in the world sitting there to bounce ideas off of. So I'm a big fan of it for that. I'm really anti pure Gen AI. I have yet to see great use cases for Gen AI writing, with the exception of a few things. Like I think Bloomberg does a relatively good job with their sort of key takeaways from long articles. So they do their own TLDR on top of their own articles with AI. That's on the border of more useful than distracting, but I'm reaching. Most of those implementations have seemed terrible.
I'm fascinated because I see that this is the biggest change that I've seen, broadly speaking, in my life and work in a long time. We had internet a long time ago, but since then, it was tweaking, but this is something that's really changing. To me, it frees up time for the highest value added, right? So I remember as a junior analyst a long time ago, I would be going through the earnings releases and summarizing what I found in there. Good, bad, improving, getting worse, surprising. What did the CEO said? What did the product design mention on the call that we're paying attention to right this minute? So I would spend the 4 hours, 5 hours, just going through it and trying not to miss anything. Now that can be done with AI tools, and I can Ish. You know what the catch is? I think the quality of the questions, and then I always ask it to give me the quote, so that even if AI misunderstood the qualitative statement, I can read it and understand it better. That's why I asked you earlier on how you have 2 people reading the same summary and walking away with 2 different, that's the beauty of the markets. Anytime you decide to buy Tesla, somebody is selling it, right? And the other way around. And they're probably as smart as you are. And don't fool yourself. They just concluded something different. But anyways, I feel like it frees up time for like the highest level of thinking. That's one thing. And that feedback loop that you can go back and ask again, or you're like fixing formulas in Excel. I have some elaborate things that I play with that I can go and fix it. That it makes me think through the question on a deeper level than before. The reason why I have to do it, because if you give it to a human, the human will take it and kind of, an intern will play with it. The machine, you just ask me that and I'll tell you exactly what you asked me, right? Like there's less room for, I'll interpret what you asked me. Like how many of us have taken a boss's question and interpreted the question? AI doesn't really do that yet. But that's where, I go in and I can ask a better question and get a better answer. I think it's just fascinating how quickly you can fix it.
I still feel like we're halfway there.
Oh yeah. This is just the beginning. This is just the beginning.
I do every once in a while remind myself, like, this is the worst it's ever going to be.
Yeah.
Literally, this is the worst AI we'll ever work with again in the rest of our lives. Where I think the step function on real human intelligence is going to happen is when AI really becomes personalized agents.
Mm-hmm.
I think the tech is less the issue there, and the trust stack is the issue there, right? I mean, I think like here's an example. Everybody I've ever mentioned to this to is like, oh yeah, of course I want that. I have a giant Dropbox folder. I have 4 or 5 Notions. I have blogs I've been writing since 2006, right? I have an enormous quantity of crap that I have decided is somehow either my output or important to me. What I really want is a singular AI agent that's going to take all of that into account when I ask a question so that it understands the context of, he's written this stuff before, he's written that stuff before, he was really critical of that, he was wrong about this other stuff that then happened this way. None of those are technical hurdles right now, which I find fascinating. Everybody I've talked to who's developing AI is like, oh yeah, like that's just, we can do RAG automation of this and that. It's like, and I've gone through the process of like indexing my own stuff. And like back in the early AI days, which was what, a year ago, I went through the process of starting to try to build that myself. And indeed, you can build that if you're an organization, right? You can build that kind of true knowledge base and personalized agent, which is how you get things like the chatbots that are answering your questions on a website. The reason we don't each have that of our own right now is because none of us trust anything enough. Right? I don't even trust Google enough to connect them to like a finance document. So until we've got some belief that we can control that environment, we're not going to get the really good stuff.
At the end of the day, I care about the source material. And I think that's very important in life in general and especially in investing. So even if it points me in a certain direction, then I know where to look. I want to see the original. Who said it, when they said it, I want to read it. But I think, when I was listening to you, it brought back some memories. When I started my first New York Wall Street work, they were using some alt software. I don't even remember the names. And I brought something new where I brought salespeople from a firm that was offering something that was much more up to date. And the response was, what can this do that we couldn't do when we were your age with a pencil and a legal pad? And I said nothing, but it can do it in a fraction of the time and probably with fewer errors. And we can, repeat it with many different holdings or with many different case studies. And we can narrow it down to the highest value added. And here, I think we're taking it to a whole new level. And I like your point that this is the worst AI we will ever see. But think of what it could potentially do. Anywhere I find a gap where I'm thinking, why can't it do this? Or why it misunderstood me? I can imagine that a few years down the road, maybe months, it will understand me. And that's a cool thought. Maybe it's a bit scary, but I think it's a cool thought that it will get it.
Yeah, I agree. Man, I just want the simple stuff out of AI. Now we're kind of off track, but I just want to be able to talk to my computer and have it manage my email, my calendar, my schedules, reaching out to people, scheduling meetings, like all of that. Like if I had an executive assistant standing here next to me, which I did for years, where I could just say, hey, can you call these 3 people, see if you can get them all on a call at the same time, blah, blah, blah. Like those are not hard tasks. They're very automatable tasks. But again, we don't have a trust system for it yet. So it's like, I feel like we're at AI at this point where I'm like almost angry that we don't have it right yet.
Not yet. But we're going to get there.
For all the $20 a month subscriptions I'm paying.
It's coming. I can tell it's coming. Dave, I have one last big question. How do you think about success?
Boy, that's really tough. Now, I'm just going to answer from the now, like from where I'm sitting at right now. It's definitely not financial. I think success is having control over my own time, which I know is a bit of an obvious answer these days. But, I don't live a wealthy lifestyle. I live in a prefab house in the middle of the woods, but I largely control what I want to do with my time. And that feels enormously wealthy. And I think that that's a makeable sacrifice for a lot of people who don't realize it's a makeable sacrifice. And it's not for everybody. Some people just want to grind, and that's what gives them happiness in life. And that's great. For me, I'd put needles in my eyes. I'd like the ability to be like, oh, it's a really sunny day. I'm canceling everything. I'm going on a 6-hour hike. That is wealth. I don't need to get on a plane to go eat $1,000 meal in London. I need to be able to cancel everything on my calendar and go for a walk.
I had John Saforic, who wrote the Wealthy Gardener book. I don't know if you know it. Mm-hmm. And we talked about what wealth means, and it rhymes with what you said. And so many people told me, and I agree with it. He said there was a time when he could pause and go on a walk in the middle of the week and don't feel guilty about it. And he almost had tears in his eyes, and I get goosebumps thinking about that moment when he told me that, because we are all in this race, more and more and more. And there's a moment when you realize, all I just want today is to close my laptop and go on that hike you mentioned. That's all I want. And if you can actually do it, that's real riches. And that's an aspiration, but that's something that's...
Yeah, and I think it's one of those things that's really, I feel a little cringy even saying it, because the flip side is, I have a bunch of sort of mentees in their 20s and early 30s. They're not really in a position, if they want to be, have a family and buy a house and live a version of what it means to be American, for instance, they don't get to make that choice, right? You don't get to do whatever the heck you want and still accumulate enough money to buy a house in the suburbs of New York and raise 2 kids and send them to private school. You have to make different choices. And I want to be really clear the rest of my life. I don't want to disparage people making those choices, right? I don't want to ever say somebody else shouldn't earn a living and support their families, because I know I've made choices that I look back on and I'm like, I wouldn't make that choice now, but I was 30 years younger, right? There's a big difference between being 30 and being 60.
There are certain things we just had to do when we're in our 20s or 30s. We just had to do them, and that's the reality. Hopefully the payback follows, and we do have the time at some point to enjoy it.
And that's not a Western issue, right? I think that was true when we were hunter-gatherers, right? If you were the 23-year-old with lots of muscles who could throw a spear really well, guess what? That's what you did.
You were busy. I think it's a fascinating concept that we have a lot of time in our lives later on. I look at my grandparents, and we don't have the time when we really need it, and when we have all the ideas what to do with it, whether we want to go flying or do something else. I don't know. I don't have the answer, but it's fascinating. The moment we realize, and Vitaly Katzenelson reminded me of it, that you want to buy time with money. There's a moment when you can just spend money to get the time back. And you talked about the assistant. He has a wonderful woman that's helping him a lot. Once we have that kind of help, whether it's technology or a person, we can free up some time, and it does come later on in our life. So when it does, we all appreciate it. Dave, this was such a wonderful conversation. We went into 12 different directions. Somehow we bridged them all, from flying to meditation to ETFs and everything in between. But I'm very grateful that you decided to spend this hour with me and my audience instead of going on that beautiful hike, which I hope still is on the books for this afternoon for you. So thank you so much.
Oh, thanks for having me. And absolutely, I'm heading out the door now.
You were listening to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest subject of all, money. But our conversations lead us to an even bigger question: what it means to live a rich life beyond money. If you enjoyed the show, please take a moment and follow, subscribe, rate, and share with friends and family. We rely on word of mouth to promote the show. One click for you means the world to us. Thank you. Until next time, your host, Bogumil Baranowski.